love to start off on geopolitical risk because you've seen a bunch of it during your long career. How do you go about playing these kinds of things if you're an investor and being concerned about, obviously, Russian aggression in Ukraine and or what at least seem to be some positive signs today on the diplomatic front?
Well, it's funny, David. It's kind of a mixed blessing. Yes, the Lavrov's comments have eased back some of the tension, but it's also taken away the flight to safety that the market had, and that's allowed the yield on the 10-year to move back up to 2%. So that's a bit of a concern to the market also. As far as Putin, I think the possible military move didn't look like it was going to come too early, because when he rushed some troops down to Kazakhstan to protect that government, he sent some of his top troops, leaving him with a chunk of that group in Ukraine as draftees. So he may be waiting to bring back the guys from Kazakhstan and get himself in shape. So I think that may have delayed things. But I think what Putin wants to do is embarrass NATO. He wants to get it in a position where it would look like not the actual conflict, but to see that maybe NATO is not really as unified as it's supposed to be at a time of crisis like this. And that kind of embarrassment, I think, would be a European benefit to Putin. But for now, as I say, it's a mixed blessing. It can be a flight to safety, and when it's not, we're losing out with the bonds.
All right. Well, all right. Let's assume the worst here. Let's assume that, in fact, Putin does choose to invade. What's the market reaction, in your opinion, Art?
Well, I think the market would, if he actually invaded, if there was military conflict, I think it would. The market would move sharply lower. I think in the meantime, it's the market is testing its own internals to find out what shape it would be in case there is a bit of a surprise. I'm hard pressed to think that we necessarily get into a shooting conflict. I don't think Putin is ready for that. I think he wants to kind of do some diplomatic circling. But as I say, I'll be watching to see if he gets all of those troops back from Kazakhstan. Then I would worry a little bit more about some kind of actual military overture.
Meantime, Art, it's Morgan. The comments we got from Bullard on our air this morning, this idea that inflation is everywhere, that perhaps it makes sense to front-load tightening because inflation is accelerating. I mean, it does seem to me that the geopolitical situation and the inflationary headwinds that could add to a conversation that's already being navigated by the Fed and thus market participants right now is really sort of what's front and center. So how does that play out? And is Bullard somebody who is going to get more Fed officials on board with his thesis?
Well, I think he's going to get help from the markets because we are seeing oil moving up. And more importantly, you're seeing things like aluminum, construction metals. They're all there. And the threat of conflict raises those prices. You get the equivalent of hoarding from people like China and others. So the market's very jumpy here, and I think Morgan was with good cause, because we've got inflationary pressure absolutely sitting on the doorstep. I don't know that Bullard would be the leader of any kind of insurrection. My great concern is the Fed rarely gets this right. They always talk about tapping on the brakes and slowing things down. And invariably, as they begin to tap, they wind up slamming on the brakes. And that is disruptive to the stock market again and again over the 60 years I've been watching it. And I'm afraid we'll get there, because I think will happen is when we start to raise rates and we stop adding. I mean, we're still adding, which is the crazy part of it. I think I would have preferred if they stopped QE first and then looked at the rates. But it looks like they're going to put both feet on the brake. They're going to wind up basically eliminating the QE at about the same time they're raising rates. And that, I think, could be an abrupt surprise to the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.